आवाज नहीं आ रही कटिया नहीं हुई आवाज
नहीं सर ऑडियो प्लेस करिए
नहीं आ
Good.
All right, good morning, everyone. It looks like everyone is here.
Good morning. I am Tarlochan Sahiwal on behalf of India Oven Inc. Along with me,
Good morning, Mr. Sahiwal. I will get to you in a minute. I'm going to go over a couple of things and then we'll get started. Thank you. So before we go on the record, I want to state that as everyone is aware, these proceedings will be live streamed to the public, and we have already started the live stream. So that being said, please do not show any documents that are personal or sensitive information on the screen. So we are here today for the hearing in the case of India Oven Inc., OTA case number 2209-11466. My name is Judge Ralston, and I'm the lead administrative law judge who will be conducting the hearing for this case. Also, we have Judge Keith Long and Judge Teresa Stanley will be filling in for Judge Lauren Katakahara. So does any party have an objection to Judge Stanley's participation on this panel? Gonna start with Mr. Samara Wikrima. Does CDTFA have an objection to Judge Stanley filling in for Judge Katakahara?
No, Judge. Thank you.
Thank you. And Mr. Sahiwal, do you have an objection to Judge Stanley filling in for Judge Lauren Katakahara?
no, Judge.
Thank you. So I'm just going to cover a few things before we go on the record. As I stated before, this hearing is being live streamed to the public and is being recorded. The transcript and the video are part of the public record and will be posted on OTA's website. So that being said, please make sure that you don't show any private or sensitive information on the screen. Also present is our stenographer, Ms. Alonzo, who is reporting this hearing verbatim. To ensure that we have an accurate record, we ask that everyone speaks one at a time and does not speak over each other. Also, please speak clearly and loudly. If needed, Ms. Alonzo will stop the hearing process and ask for clarification. After the hearing, Ms. Alonzo will produce the official hearing transcript, which will be available on the Office of Tax Appeals website. We held a pre-hearing conference in this matter on February 24th, 2025. At that conference, or prior to the conference, the respondent, CDTFA, has submitted exhibits A through I. Mr. Sahiwal, at the pre-hearing conference, you noted that you did not have any objections to CDTFA's exhibits A through I. So let me first start with Mr. Samar Wikrima. Is that still correct? You have exhibits, just exhibits A through I?
This is Nalan Samarakam. Yes, Judge.
Okay, thank you. And Mr. Sahiwal, did you have any objections to CDTFA's exhibits?
No objection, Judge.
Thank you. Okay. And then the appellant had previously submitted exhibits 1 through 4. And respondent had no objection to those exhibits. After the hearing, the appellant submitted some additional exhibits, which consisted of a letter from Mr. Sahiwal stating that the dates of the 2017, 2018, and 2019 federal income tax returns were filed. And this exhibit is 1 page. And appellant also submitted audit work papers for India Oven for the audit period January 1, 2020 through December 31st, 2022. And this exhibit is approximately 21 pages. So Mr. Samar Wikrima, with regard to appellant's exhibits 1 through 4, is it still correct that you have no objection to those exhibits?
This is Nalan Samarakam. That's correct, Judge.
Thank you. And then with regard to the recently submitted exhibits, the letter from Mr. Sahiwal and the audit work papers, first, did you receive those exhibits?
This is Nalan Samarai. Yes, Judge.
Okay, and do you have any objections to those exhibits?
It's not timely. So we object
Okay.
based on the timely.
Okay,
Judge, we also object because it's irrelevant.
okay, thank you. Just take a few notes. Um, Mr. Sahiwal, can you just briefly state why why you're submitting these documents and why they were not submitted timely?
Judge, after the last hearing, we had one online meeting with Mr. Samarai Vikrama. There he raised one point that all the 3 tax returns for the 3 years were filed by India Oven Inc. in the year 24. So I clarified to him, and then Mr. Samarai Vikrama, he mentioned to us that you can even now submit your contention and give let us know when the tax returns were filed. So that's why, as per discussions with Mr. Samarai Vikrama, I only issued that thing, and that was the day next to, because although our meeting was supposed to be held within the time, but unfortunately, Mr. Gurdev Singh's relative, he died on the day, one day prior to that. Because of the death, our meeting with Mr. Samarai Vikrama got postponed. And that's why I was late, and I request your lordship to condone, and considering the circumstances because beyond control because of the death of the person.
Okay, thank you. I'm gonna go ahead and admit the exhibits, and we will apply the appropriate weight to them during our evaluation. So we will label the appellant's exhibit, the letter from Mr. Sahiwal, as exhibit number 5, and the audit work papers will submit it as one exhibit, and we will label that as exhibit 6. Okay. At the pre-hearing conference, Mr. Sahiwal, you stated that you would have Mr. Gurdeep Singh and Mr. Sunny Sehgal testify under oath as witnesses. Is that still the case?
Yeah, they are with me. Yes, Judge. Mr.
Okay.
Gurdev Singh, president of the company, and his son, Sunny Sehgal, they are both sitting with me here. Present.
Okay. Did you have any other witnesses?
No, Judge, nothing.
Thank you. And Mr. Samar Wickrama, at the pre-hearing conference, you stated that CDTFA did not have an objection to Mr. Singh or Mr. Sehgal testifying. Is that still correct?
This is Nalan Samarai. Yes, Judge, that's still correct.
Okay. And is it still correct that CDTFA does not intend to call any witnesses?
This is Nalan Samarai. Yes, Judge, we don't have any witnesses.
Okay, thank you. So, Mr. Sahiwal, when we get to that point, I will swear your witnesses in before they testify, but I'll let you know when that time comes. As far as the issue, I understand that there's just one issue, and that is whether adjustments to the measure of unreported taxable sales are warranted. Mr. Sahiwal, is that correct?
That's correct, Judge.
Thank you. And Mr. Samar Wickrama, is that correct?
Yes, Judge.
Okay. As far as the time estimates, Mr. Sahiwal, you will go first and you will have 30 minutes to use for your opening presentation and your witness statement or your witness presentations. After that, the judges may have questions for you or the witnesses, and CDTFA may also have questions for your witnesses. And then CDTFA will give their presentation and they will have 30 minutes. And then you will, then Mr. Sahiwal, you will have 5 minutes for a rebuttal to respondent's presentation. So, Mr. Sahiwal, I do have a question for you before we go on the record. So the letter that you submitted as Exhibit 5, which is the letter wherein you state the dates that the federal income tax returns were signed, that letter is not signed under penalty of perjury. So if you want, before you give your presentation, we could swear you in as a witness if you wanted us to consider the information that you give us as facts. If you wanted to testify as to the factual statements, we could swear you in. Did you want to do that?
Yes, Judge, no problems. I'm ready to testify and swear about it because I was
Okay.
the filer for the tax returns, and this information, this certificate I issued based on what the actual dates the returns were filed.
Okay. Mr. Samar Wickrama, would you have any objections to Mr. Sahiwal being sworn in to give testimony as to that information?
No, Judge.
Okay, thank you. So when we get to before your presentation, then I'll swear you in at the same time that we swear in the witnesses, Mr. Sahiwal. So that's everything that I have to cover before we go on the record. Does either party have any questions for me before we go on the record?
No objections, Judge.
Thank you. Okay, so it looks like,
No, Judge.
okay, thank you. So we are now on the record. Oh, Ms. Alonso, are you ready for on the record? Thank you. And my co-panelists are ready as well. Thank you. So we are now on the record in the appeal of India Oven. This matter is being heard before the Office of Tax Appeals. The OTA case number is 2209-11466. Today's date is Tuesday, March 18th, 2025, and the time is approximately 9:54 a.m. Today's hearing is being heard by a panel of 3 administrative law judges. I am Judge Ralston, and I will be the lead judge. Judge Long and Judge Stanley are the other members of this tax appeals panel. Judge Stanley is replacing Judge Katagihara, and the parties do not object to this substitution. All 3 judges will meet after the hearing and produce a written decision as equal participants. Although as the lead judge, I will conduct the hearing, any judge on this panel has the ability to ask questions or otherwise participate to ensure that we have all the information needed to decide this appeal. I'm going to start with the parties and ask you to please state your name and who you represent for the record, starting with Mr. Sahiwal. If you could introduce yourself and then also have the people that are with you today introduce themselves.
Judge, my name is Tarlochan Singh Sahiwal. I'm a CPA representing India Oven. Along with me is Mr. Gurdev Singh, who is the president of the corporation, and his son, Sunny Sehgal, who has been assisting his father because his father is not keeping well for a couple of years. And also I have my assistant, Mandeep Kaur, with me. We are four of us here before you, Judge.
Thank you.
Uh-huh.
And for the respondent, CDTFA, please state your names and who you represent for the record.
Yeah, this is Nalan Samarekram, a hearing representative for CDTFA. Thank you.
Jason Parker, Chief of Headquarters Operations Bureau with CDTFA.
Christopher Brooks, attorney for CDTFA.
Thank you. As confirmed at the pre-hearing conference, there's one issue to be decided in this appeal, and that is whether adjustments to the measure of unreported taxable sales are warranted. As discussed at the pre-hearing conference, appellant intends to call Mr. Gurdeep Singh, the president of the corporation, and Mr. Sunny Sehgal, the secretary of the corporation, to testify under oath. Mr. Sehgal will also testify under oath, and the respondent does not intend to call any witnesses. Appellant has submitted exhibits 1 through 6, and respondent has objected to appellant's exhibits 5 and 6. Appellant's exhibits 1 through 6 will be admitted. And respondent has submitted exhibits A through I, and those are admitted without objection. The hearing is expected to last approximately 70 minutes. The appellant will have 30 minutes for their opening presentation and witness testimony. Respondent will have the opportunity to cross-examine the witnesses if they so choose. Respondent will then have 30 minutes for their presentation, and the appellant will have approximately 5 minutes for rebuttal. The panel may ask questions of the witnesses and/or parties at any time. Does anyone have any questions before we move on to the opening presentations?
No questions, Judge.
Thank you.
No question, Judge.
Thank you. So, Mr. Sehgal, I'm going to swear you in first. So I'm going to ask you to please raise your right hand. Do you swear or affirm to tell the truth, the whole truth, and nothing but the truth?
Yes, Judge.
Thank you. And now for Mr. Singh.
Just hold on.
Thank you. Yes, please raise your right hand. And do you swear or affirm to tell the truth, the whole truth, and nothing but the truth?
Yes, Judge.
Thank you. And now Mr. Sehgal. Thank you. Do you swear or affirm to tell the truth, the whole truth, and nothing but the truth?
Yes, Judge.
Thank you. Okay, we are ready for appellant's opening presentation. Mr. Sehgal, you have 30 minutes for your presentation and witness testimony, so please begin when you're ready.
Judge, although we have submitted all the papers, and I'll be very brief in saying one thing, that the earlier audit which was conducted, it was in between, there was a COVID time also, and the auditor did not justify the, his remarks and all that. He made his report without even physical observance for the criteria which he arbitrarily determined, like credit card ratio of 67%, without even actually verifying. But in the subsequent audit, which we have, the report we have submitted to your lordship, there the auditor actually observed for a week, and he determined 91% credit card ratio. Number two, in the audit in question, we at the time we had only one cash register, And at the time, like one credit card, we had only one credit card issuer. So we could not, in fact, separately, mention this party hall income, which is in fact non-taxable. And it was the auditor, CDFT is auditor only, who suggested us that we better have a separate, agent for the credit card and the credit card system, and which we subsequently took. And in the subsequent audit, if the department could admit and could give a ruling that the party hall income is not subject to tax, sales tax, then the same criteria should be applied to our previous audit also. And in that case, I think I'd like Sunny Sahgal to give the details on this, if you permit, ma'am. That's all from my side.
Yes, go ahead.
Yes.
Hi, Judge. So the question is, so in the reason why we added the second audit, because this was a recent audit that took account after the advice from the first auditor that to get a separate credit card machine. During the audit that is in question, we only had one credit card machine. So the banquet halls income sales were added to the same credit card machines. So but those sales are non-taxable. And in our income tax returns, all our party income sales are listed onto there as additional income. So, and not only that, when the second audit, the recent audit that we added, that we submitted documents for, the auditor actually came and sat down, and he saw that the credit card ratios were much higher than what the audit in question had. So we're just we really just want the same parameters to be placed, because the party income sales are added into the 1099s that the auditor had in the audit in question. But all those sales are not taxable, because those sales also include the party income sales, which is non-taxable. So that's our main thing. That's our main question is that why cannot we have the same parameters in place? Because we have a banquet hall, we rent out our banquet hall, which is non-taxable sales, and this audit that we submitted, the papers that we submitted, it's listed on page 18 of that, where the auditor has written, the taxpayer has two separate merchant accounts, one for restaurant sales, another for rental of a banquet hall. Taxpayer wasn't able to provide sales documents, but provided current sales contract testing. Auditor conducted a sample test to check if any taxable sales were included in the banquet hall transactions. After reviewing the documents, auditor determined the sales proceeds processed through the second merchant accounts for the banquet hall rental were non-taxable and will not be included in the forthcoming analysis. So that is what we're saying is our party income sales were added into the same credit card machine, because there was only one credit card machine.
Mr. Sahgal, I'm going to ask you to just speak a little bit more slowly next time.
Sorry about that, ma'am.
No problem.
So
Does that conclude your presentation?
yes.
Okay. Mr. Sahiwal, did you have anything else?
No, Judge.
Okay.
Judge, sorry. Oh, one thing came to my mind. I don't know whether it's relevant here or not. If you feel, because after our this last hearing, when we have a meeting with Mr. Samara Vikrama, he raised one question that in our 2017 tax return, why there were higher purchases. He asked us a question. I don't know whether it's relevant here. During the year 2017, on about 3 occasions, there was a big power outage in our area, which was in fact on the main line. It was not our local line, and we had to destroy our everything because we were without power, and all food items and everything had to be destroyed on 3 occasions. And then the local government asked us to file a claim regarding that. Although we filed the claim, but we didn't get anything. I don't know whether it's relevant or not, but I'd like to bring it to your notice. Other
Okay,
than
thank you.
that, Judge, I don't have anything to say.
Okay, thank you. Okay, so does that concludes the appellant's presentation then?
Yes,
So let's move on. Mr. Samar Wikrima, did you have any questions for either witness?
No, Judge.
Okay, thank you. So I do have a question. So for the audit period in question, what percentage of the sales are you attributing to the party hall sales? Are you saying it's exactly the same as the second audit, or what exact percentage are you saying in the audit should be attributed to the party hall sales?
Judge, the sales are added into our income tax returns. So in 2017, 2018, and 2019, so I could exactly, if you give me 1 second, I could tell you in the year of 2017, how much were our incomes, our party income.
there's asking for the percentage. This is 17.
Party.
402.
See?
Yes, it is is virtually the same percentage is there, right? But 403.
Yes. So, the percentage should be the same. Because if you look at our 2017 income tax return, it says other income, it shows $403,546 for 2017. It was actually greater than what we made in the restaurant.
It's almost 50-50. And 17 and 18 also, it was the same. More criteria is more or less the same
Yes.
Okay.
percentage.
So you're stating that the other income listed on the federal income tax
Yes.
returns is the,
Party income.
yeah, so yeah, just remember to let me finish, since we have our stenographer taking down. Yeah, even if you know the answer, you think you know what I'm gonna say, that way we get a clear record.
Sorry
Thank
about that.
you. No problem. Thank you. Okay, that's all the questions I have. I'm gonna check with my co-panelist, Judge Long. Did you have any questions for either witness?
Yes, I do have some questions. Mr. Sahiwal, did you prepare, I see that you prepared the income tax returns for India Oven. Did you also prepare the sales and use tax returns?
No, the sales tax returns were done by a different auditor. Well, he was a preparer, tax preparer. His name was Harry Mann.
Okay, but you did, did you participate in the audit?
No, he is not. You're talking about Mann? No,
No.
Harry is not there. No,
No,
sorry,
I-
didn't get you, sir.
I'm sorry, I'm asking, were you the representative during the audit of India Oven?
Sales tax audit?
Yes,
I was not there.
okay.
Sales tax physically, I was
Yeah,
not there.
no.
I was not there physically.
What books and records were used to prepare the income tax returns?
So we get the sales figure based on the sales tax returns filed. And most of the information is provided by the client. And here in this case was India Oven. They provide the expenses and the sale and everything. We tabulated in the form, and then we created the like trial balance and the general ledger, and then we filed complete the profit and loss and the balance sheet.
Now, I understand that I understand the contention that there's only one cash register or one credit card machine during this audit period. What was used to track the differences between the reported taxable sales and the unreported sales, which you're asserting are party hall sales?
And they had their checks from the customers and also their expenses separately listed for the party hall.
Separately
So we
list,
took that information from them and tabulated separately, and the income, we put it separate
and
on the checks received from
okay.
customers.
And was none of this information available for the audit?
During the first audit, it was the other information was not available. That was based on the party statement and all the major checks which were received from the customers. They were tabulated separately.
Okay, so the federal income tax returns then were based on the sales and use tax returns plus the checks that were provided from the customers,
Yes,
and that was the only tracking.
yes, Judge.
Okay, thank you. I have no further questions.
Thank you, Judge.
Judge Stanley, did you have any questions for either witness?
I'm still thinking about it, so I might reserve and ask questions after CDTFA's response.
Okay, thank you, Judge Stanley. And before we move on, Mr. Sahiwal, did you want to restate the contents of your letter that you submitted, Exhibit 5? Did you want to state that information for the record?
Yes. I can, I issued that certificate, and you said you wanted me to swear on it. Like, I'm ready to swear that is correct on the perjury.
Okay, thank you.
Uh-huh.
Okay, so it looks like we are ready to move on to the respondent's presentation. Mr. Samar Wickrama, you have approximately 30 minutes, so please begin when you're ready.
Thank you, Judge. Pellant, a California corporation doing business as India's Oven, operates a restaurant in Fresno, California, serving Indian-style cuisine. The department audited Pellant's business for the period January 1st, 2017 through December 31st, 2019. During the audit period, Pellant reported around $1.4 million as total sales and claimed around $546,000 as non-taxable food sales, resulting in reported taxable sale of around $818,000 for the audit period. This is on Exhibit A, pages 30 and 31. During our presentation, we will explain why the department rejected Pellant's reported taxable sales, why the department used an indirect audit approach, and how the department determined Pellant's unreported taxable sales for the audit period for this Pellant. During the audit, Pellant failed to provide any sales records. Pellant did not provide complete documents of original entry, such as sales receipts, guest checks, credit card sales receipts, catering invoices, banquet sales contracts, and related documents, bank statements, sales journals including banquet sales journals, or sales summaries to support its reported taxable sales and claim food sales for the audit period. In addition, Pellant failed to provide any purchase invoices or purchase journals for the audit period. During the audit, Pellant was unable to explain how it reported its sales on its sales and use tax returns. Pellant was also unable to explain what sources it relied upon to complete its sales and use tax returns. The department did not accept Pellant's reported taxable sales due to lack of reliable records. The department also determined that Pellant did not provide any books or records that could be used to verify its reported taxable sales and its claim exempt sales for the audit period. The department completed 4 verification methods to verify the reasonableness of Pellant's reported total and taxable sales. First, the department analyzed Pellant's reported taxable sales for the audit period, and these are shown on Exhibit A, page 39. The department compared the reported taxable sales with total sales and calculated an overall taxable sales percentage of around 60%, ranging from as low as 58% to as high as 68% for the audit period. And these calculations are shown on Exhibit A, page 39. The department also analyzed Pellant's reported taxable sales for the audit period and noted average daily reported taxable sale of $747, ranging from as low as $572 to as high as $829 for the audit period. And these calculations are shown on Exhibit A, page 38. Based on the restaurant's capacity, location of the restaurant, customer base, and the number of days open for business, the department viewed this as a very low daily taxable sale for this business. For comparison, Pellant's average taxable daily sales based on audited taxable sales were $1,381. And these calculations are on Exhibit A, page 38. Second, the department reviewed Pellant's federal income tax return for years 2017 through 2019 and compared the sales reflected on federal income tax return of around $1.7 million and other income of around $1.2 million with Pellant's reported total sales for the same period. The department calculated an overall difference of around $1.5 million, and this calculation is on Exhibit A, page 41. The department also compared reported total sales with a cost of goods sold of around $1.4 million, reflected on Pelham's federal income tax returns, and calculated an overall negative reported book markup of little over 5%. And this calculation is on Exhibit A, page 41. If we were to accept this reported negative book markup, that would mean Pelham was losing money every time it made a sale. Accordingly, the department did not accept Pelham's reported total sales for the audit period. However, based on the audited total sales and cost of goods sold, Pelham's overall post-audited book markup was around 50%, and this calculation is on Exhibit A, page 42. Third, the department compared reported total sale of around $1.4 million to the rent of around $252,000 reflected on Pelham's federal income tax return, and calculated an overall rent ratio of around 19%. And this calculation is on Exhibit A, page 41. Based on this high rent ratio, the department determined that the Pelham did not report all its sales on its sales and use tax returns. Based on his experience in audits of similar restaurants in Pelham's area, the department expected to see a lower rent ratio for this restaurant. In comparison, using the audited sales, the overall rent ratio is reflected at around 12%, and this calculation is on Exhibit A, page 42. Fourth, Pelham did not provide any sales information for the audit period. Therefore, the department obtained Pelham's credit card sales information for the audit period from his internal sources. And this information is on Exhibit A, page 40. The department compared the reported total sales with the credit card sales and calculated an overall credit card sales ratio of around 128%, ranging from as low as 108% to as high as 170% for the audit period. And these calculations are on Exhibit A, page 40. The credit card sales for the audit period are more than the amount of the reported total sales. And this is shown on Exhibit A, page 40. This is an indication that not all of Pelham's cash and credit card sales transactions had been reported on its sales and use tax returns. Pelham was unable to explain the low reported average daily taxable sales, negative reported book markups, high reported credit card sales percentages, and high reported rent ratios. Therefore, the department conducted further investigations. The department decided to use a credit card sales ratio method to calculate Pelham's taxable sales. But Pelham failed to provide its sales information to determine its non-taxable sales percentages, credit card tip percentages, and credit card sales percentages. Pelham also failed to provide its credit card sales information for the audit period. Therefore, the department used the best available information to determine audited taxable sales. So the department reviewed 3 similar restaurants to determine a reasonable credit card tip percentage and credit card sales ratios in the area. These 3 restaurants were located in the same general region as Pellen's business and were audited by the department for similar audit periods. Based on these 3 similar restaurants, the department calculated an average credit card sales percentage of around 68% and credit card tip percentage of around 11%. And these calculations are on Exhibit B, page 58. In preparation for this oral hearing, the department also verified the reasonableness of this credit card sales percentage using Pellen's sales and other income reflected on its federal income tax returns and calculated an overall credit card sales percentage of around 60%. And this calculation is shown on Exhibit A, page 40. During the audit fieldwork, Pellen failed to provide credit card merchant statements or credit card sales information to calculate its credit card sales for the audit period. Therefore, the department obtained Pellen's credit card sales information for the audit period from its internal sources. And this is on Exhibit B, pages 60 through 66. Then the department used the total credit card sales, credit card tip percentage of around 11%, credit card sales percentage of around 68%, taxable sales percentage of 70%, and applicable sales tax rate factors to determine audited taxable sale of around $1.5 million for the audit period. And these calculations are on Exhibit A, page 37. Audited taxable sales were compared with reported taxable sale of around $818,000 to determine unreported taxable sale of around $694,000 for the audit period. And these calculations are on Exhibit A, page 37. Unreported taxable sales were compared with the reported taxable sale of around $818,000 to calculate the error rate of around 85% for the audit period. In preparation for this oral hearing, the department calculated the unreported total sales percentage of around 114% using sales and other income reflected on Pellen's federal income tax returns and sales and use tax returns. And this information required to calculate this percentage is shown on Exhibit A, page 41. The department used unreported total sales percentages and the taxable sales percentage of 70% with the reported total sales to determine audited taxable sale of around $2 million for the audit period. And these calculations are on Exhibit A, page 43. Audited taxable sales were compared with the reported taxable sale of around $818,000 to determine unreported taxable sale of around $1.2 million for the audit period. And these calculations are on Exhibit A, page 43. The department noted substantial discrepancies between audited and reported taxable sales using both audit methods. To give a benefit to Pelon, the department assessed the unreported taxable sale of around $694,000 based on the credit card sales ratio method rather than the unreported taxable sale of around $1.2 million based on sales and other income reflected on Pelon's federal income tax return. And these calculations are on Exhibit A, pages 35 and 43. The audit calculation of unreported taxable sales based on the credit card sales ratio method was fair and reasonable. Further, it benefits the appellant because it was the lower of the differences determined. When the department is not satisfied with the accuracy of the sales and use tax return file, it may rely upon any facts contained in the return or upon any information that comes into the department's possession to determine if any tax liability exists. A taxpayer shall maintain and make available for examination on request by the department all record necessary to determine the correct tax liability under the sales and use tax laws, and all records necessary for the proper completion of the sales and use tax returns. When a taxpayer challenges an notice of determination, the department has the burden to explain the basis for that deficiency. When the department's explanation appears reasonable, the burden of proof shifts to the taxpayer to explain why the department asserted deficiency is not valid. Since Pelon failed to provide necessary records, the department used the best available information to determine the unreported taxable sales for the audit period. The audit calculation of unreported taxable sales based on the best available information was fair and reasonable. Pelon claimed that the audit liability is overstated because the rental income from the banquet hall may not have been excluded from the calculation of the audited taxable sales. As support, Pelon provided federal income tax return for years 2017 through 2019 to show that the other income represent non-taxable banquet facility rentals, and these are on Exhibit C. Recently, Pelon also submitted audit working papers for the subsequent audit period, January 2020 through December 2022. However, Pelon failed to provide his banquet facility rental contracts, related sales invoices, or other similar documents to determine the taxability of banquet facility rental income. The department analyzed Pelon's argument and ultimately rejected it. Upon examination of those documents, the department noted that Pelon did not provide any source documentation or any other information to corroborate the figures listed as other income in Pelon's federal income tax returns. Pelon also failed to demonstrate that its business environment and the business activities during the subsequent audit period were the same as this audit period. Nevertheless, the department analyzed these federal income tax returns with Pelon's sales, other income, cost of goods sold, rent expenses, and Pelon's credit card sales information, and calculated book markups, credit card sales ratios, rent ratios for the audit period. For example, excluding other income reflected in Pelon's federal income tax return, the department calculated overall book markup of around 17%, credit card sales ratio of around 104%, rent ratio of around 15%. And these calculations or the information required to calculate these percentages are shown on Exhibit A, pages 40 and 41. A similar analysis was made using both sales and other income reflected on Pelon's federal income tax returns. Based on these analyses, the book markup was around 102%. Credit card sales ratio was around 60%. And rent ratio was around 9%. And these calculations are shown on Exhibit A, pages 40, 41, and 42. In addition, the department also analyzed Pelon's taxable sales using its cost of goods sold reflected on these federal income tax returns, 150% expected book markup, and taxable sales ratio of 70% to verify the reasonableness of audit findings. Based on this analysis, the department concluded that by using the cost plus markup method would increase the unreported taxable sales by around $1 million from $694,000 to $1.7 million. Pelon has not provided any documents of original entry, such as sales receipts, guest checks, credit card sales receipts, catering invoices, banquet sales contracts, banquet sales invoices, and related documents, sales journals, including banquet sales journals or sales summaries for any part of the audit period to support its contention or to disprove the department's calculation of audited taxable sales for this audit period. Furthermore, the average purchases reflected on Pelon's federal income tax return was around $478,000 for this audit period and $262,000 for the subsequent audit period. And these amounts are shown on Exhibit C, Exhibit A, page 42, and Pelon's Reason Exhibit 6. This notable decrease indicates that Pelon's business activities were not consistent between the audit periods. Similar variants were noted on sales, other income, wages, depreciation expenses, contract labor expenses, average book markups, and net income between the audit periods. And this information is shown on Exhibit C, Exhibit A, page 42, and Pelon's Reason Exhibit 6. Based on the subsequent audit, the department determined Pelon falls under the 80/80 rule and disallow all claimed food sales for the subsequent audit period. In this audit, the department allowed exempt food sale of around $700,000 without any supporting documents. And this is shown on Exhibit A, page 37. The subsequent audit further supports that the unreported taxable sales based on the credit card sales ratio method for this audit was fair and reasonable because the department allowed around $700,000 adjustment for unsupported, non-taxable food sales in this audit. And this adjustment is shown on Exhibit A, page 37. Also, this audit period was prior to COVID-19 pandemic, and the subsequent audit period was during and after the COVID-19 pandemic. As such, audit working papers from the subsequent audit period are not likely representative of Pelon's business activities during the audit period. From all these analyses, the department concluded that it used an audit approach which yield the lowest deficiency measure to give a benefit to the Pelon. Pelon has not provided any reasonable documentation or evidence to support an adjustment to the audit finding, or provided any documentary evidence to establish a more accurate determination. Therefore, the department requests the appeal be denied. This concludes our presentation. We are available to answer any questions the panel may have. Thank you.
Thank you. I'm gonna check with my co-panelists. Judge Long, did you have any questions for Mr. Samar Wickrama?
This is Judge Long. I do not have any questions. Thank you.
Thank you. And Judge Stanley, did you have any questions for Mr. Samar Wickrama?
This is Judge Stanley. No, I don't. And I think that the two presentations have answered all the questions I have for appellant also, so I can waive going back to them.
Thank you. Okay, Mr. Sahiwal, you have about 5 minutes for your rebuttal. Please begin when you're ready.
If I'm pronouncing that right, I don't know. His testimony, he moreover, like a jingle based on the ratio analysis and all that, divide of the actual reality. Whatever papers we presented about the sales, they were the real fact based on the reality, not on the ratio analysis sitting in the air-conditioned rooms. To give you an example, he mentioned that they took the figures from the 3 restaurants in the area. Judge, I would like to say that within the 10 miles, about 6 miles of this restaurant, if he can prove even a single restaurant of this kind providing Indian food along with the banquet hall, I'll withdraw my claim. It was a wrong presentation that they took the 3 restaurants and they would say they took based on the figures based on that. There is not even a single restaurant providing Indian food, and the banquet hall within 5, 6 even miles, radius 6 of miles of this restaurant. This is my first contention. Second, the thing is, he is talking about the rent ratio. I don't understand how can you talk about the rent to the sales when the rent depends upon the area, the neighborhood, and the kind of the people, and not that the rent varies from place to place. And the India Oven was there since the year 2006 at the same place, and the rent ratio now coming and considering that, I think is totally unrealistic on the part of the department to do it. And third, he was talking about the credit card ratio. Although I agree that because of the COVID, the things might have changed, but the same food was being served in the banquet hall, same kind of people attended the parties. How could the ratio go up from 67% to 91% in the subsequent audit. Regarding his contention that we did not provide the information, which time and again he resorted to. And the thing is, if we did not provide the information, how could the audit be done? The fact was that their auditor was in a hurry, and for everything, I agree that Gurdev Singh was hospitalized and he was blinded from one eye. And for the other eye, he can see only 50%. He asked for the time, but it is not that we did not provide him any information. That is totally to say we did not, everything was done in absence of the information, that we do not agree, and we can still provide the things which we provided to him. And that was there. And the second part, I think I would like Mr. Sunny to use just 2 minutes for this balance on this. What is the observation of the department?
Hi, Judge. So, the official said that the following audit, that the auditor did not get any records. If you look at page 18, it's stated in the auditor's words, from the taxpayer was unable to provide sales documents from the audit period, but provided current sales contracting testing. Auditor conducted a sample test to check if any taxable sales were included in the banquet hall transactions. After reviewing the documents, auditor determined that the sales processed through the second merchant account for the banquet hall rental were non-taxable and will not be included in the forthcoming analysis. So the question is that during that time period, this audit in question, my dad was sick. We provided the auditor the documentation from the doctors that my dad's not well. His response was, well, I have to finish my audit. You guys could file an appeal. We said, okay. So we've been filing appeal, and that's where we are at. So we did, since my dad's health was not well, which is still not well, that's why when this audit happened, the following audit, we provided all the documentation to the auditor. The Z tapes, he came and got the Z tapes and also forth. If you know about thermal paper, the receipt paper, ma'am, even the documents I provided to this auditor, the following audit, even the receipts were getting faded. So we're talking about 2017, 2018, 2019. So, but nonetheless, we provided, this is why the following audit was submitted to you guys, to show that the the current sales contracts for the banquet hall we provided, and we provided him the sales contract. The auditor was able to confirm that the banquet hall sale rentals were non-taxable. All we're asking is, during this audit period that it's in question, have the same parameters applied to this audit. That's all we're asking, because this audit was actually done in person, whereas the audit that is in question was not done in person. It was generalized because as the official has said, that they compared it with 3 other restaurants. Well, no other restaurant has a banquet hall compared with their restaurant. No one provides a banquet hall for rental. So for them to compare, I don't know how they're comparing in similar restaurants, because there's no banquet hall, number one. Number two is the credit card ratios they determined is incorrect, because if you see this audit that was done in person while the auditor was here, you can see the ratio was much higher. And the party income sales were in account, he took account for that. Whereas this audit does not take into any account for the party income sales.
Thank you, Judge.
Thank you.
Okay, thank you. So I did have a question. So just to clarify, during the audit in question, not the subsequent audit, you're stating that you provided sample checks to CDTFA, is that correct?
No, Judge. What I was implying to is the audit that was done recently, we provided him information to him, not the previous audit. The previous audit in question that we were talking about, my dad was sick. The
Mhm.
auditor provided documentation from the doctor that he was not able to see. And the auditor said, well, I have to finish my audit because we have a time frame. You can file an appeal and go from there. So that is why we filed the appeal. Because he said, I have to finish my audit in a time, because they have a time frame, and he's like, I understand your dad's sick, but I have to finish my audit, you got to file appeal. So that is why we filed appeal.
Okay, I understand. Do you have documentation for the prior audit period, or are you?
Ma'am, we should have, but as I said, since the sales were on a thermal paper, they're probably already faded by that. Because we don't keep, because that's even when I provided the Z tapes for this the previous audit, there's recent audit, even then, the sales were getting faded.
You have.
So-
Checks.
Right, I understand. So,
That's
if
something I can
someone-
control. I mean, I could provide, but if they're not legible, it's gonna be. That is why we provided our sales tax to show that the party income sales, we did have party income sales as well as, but since. They were able to pull this credit card information from the 1099s. The 1099 sales also include our banquet hall rentals. So the way we separated from our sales tax, we paid the sales tax, the items, the sales that were taxable,
Yeah.
we reported
Checks,
those.
yeah.
But the other sales we did not report because they're non-taxable, which were our banquet hall sales.
Okay, I understand. So when a party or a person comes and they want it during the audit period, not the subsequent audit, the audit period here. If a party wanted to rent the banquet hall, was there a contract? Was there, what kind of
So
documentation?
during that time, we didn't have any contracts, but after, when we started, after, COVID, we made a contract. Beforehand, it was just, customers gave a deposit and so forth. My dad was more old school, so now since I've been helping my dad out, trying to get more tracking and everything, so that's why we're doing, everything was just written on paper. But now, after 2020, everything we do have contracts, and that was provided in the subsequent audit to the auditor as well.
Okay, thank you. I'm gonna check with my panel members. Judge Long, did you have any questions for either party?
Yes, I did have a question for CDTFA, actually. Appellant questioned the similarly situated businesses, and I wanted to confirm, because there's little information in the audit work papers regarding what types of businesses they are. Was this similarly situated Indian restaurants in the Fresno area, or is it just similarly situated restaurants in the same size and types of menu, I guess?
Judge, this is not uncommon. If you may go to Exhibit A, page 40. At the time of the field work, the taxpayer appellant did not provide any information, not even the federal income tax returns. And the department only had the credit card sales. So that's the reason the department used 3 similar businesses and calculated almost a 68% credit card ratio. But now we have the credit card, we have the federal income tax returns. Based on the taxpayers' own federal income tax returns, the credit card ratio for 2017 is 67.79, 2018, 67.75, and 2019, 49.85. For 3-year average is 60%. So the right credit card ratio should be 60% based on the taxpayer's own federal income tax return. The reason we use 3 similar businesses is because we didn't have anything. But even today we have 60%. So by using 68% from the similar businesses, we gave a huge benefit for the parent.
I understand that. I understand that it works out worse for appellant if you calculate it from the income tax return, but I'm just questioning for the sake of clarity, because Mr. Sawihal, questioned whether there were 3 similarly situated Indian restaurants within, I believe you said 6 miles of India Oven. And I just wanted to clarify, we're not talking about Indian restaurants. We're just talking about restaurants in general. Is that correct?
That's correct. Yes, Judge.
Okay. Thank you. No further questions.
Okay, thank you, Judge Long. Judge Stanley, did you have any questions for either party?
Just a follow-up quickly for Mr. Segal. You had mentioned that you had the records available, but that Mr. Singh was sick and couldn't see during the time of the audit. Did anyone try to step in for him and help or provide the documents at the Appeals Bureau conference with CDTFA?
We didn't have a conference. I did talk to Mr. Manveer Singh at that time, and I did provide him the tax returns. So I'm not sure, and he asked for the tax returns, and I did provide him the tax returns. I'm not sure why they were not added to the audit, but I did provide him the tax returns. But nonetheless, tending to my dad at that time, even now, Mr. Manveer Singh, I had provided him documentation that my dad's health was not well, and that I was not able to meet up with Mr. Manveer Singh at that time. He said, no, it's no problem. I have to finish my audit and you guys could file appeal. But we did provide him the tax returns. I am not sure why the tax returns were not in the audit, but we resubmitted the tax returns, and that's what you guys have, these exhibits. But the tax returns were provided to Mr. Manveer Singh.
Okay, thank you. That's all I have.
Okay, thank you, Judge Stanley. So we are ready to conclude this hearing. Today's hearing in the appeal of India Oven Inc. is now adjourned and the record is closed. The judges will meet and decide your case later on, and we will send you a written opinion of our decision within 100 days. Thank you, everyone, for attending. The next hearing will resume after a short break.
Thank you, Judge.
Thank you.